Hello everybody and welcome. Forex Live Today trading video. Today is Wednesday, the 3rd of August. It's about 10 o'clock in the morning, GMT, UK session time. The reason we're doing a video today is because I've heard a lot of misinformation and some people a little bit confused over the last few days. So let's try to clear some things up. Beginning with the SPX, the S&P 500. If you can look at the screen here, the last 2 days, very savage, aggressive move to the downside. Now, I heard a lot of people who don't really know what they're talking about mentioning that with the agreement in the US from the two sides of Parliament to raise the debt ceiling, that this would provide some sort of relief rally for the markets. But if we think about this for a moment, as part of this agreement to raise the ceiling, they also had to work out some ways to cut the deficit. Now, the major way to cut the deficit is to reduce government spending. You reduce government spending and this is removing stimulus from the markets. So why anyone would think we would get a relief rally in the markets on this news, I don't know, but they did. However, as you can see, the SPX has sold off sharply, extremely sharply. Now I'm going to now move our major support down to here, and you can see yesterday we have touched on the March lows. So we've broken this, which was providing support from May and June. We have now touched these March lows. As you can see early on today, a bit of a relief rally is underway. Whether that is people who were short from up here simply covering their shorts and taking their profits, or whether that is still people buying the dips thinking that there is some upside from here, it is yet to be seen. It will become clearer, I think, later when the US opens. But there's a little bit of a rally going on, or a bounce. But after 2 days of moves like that, with SPX moving from 1308 down to 1250 in 2 days, you'll expect some sort of bounce. Just quickly, let's hop across to the UK and you can see same story. FTSE 100, two big red candles on the charts, right sitting at critical support. Once these supports go, the FTSE actually has further support, but there's a long way to go down. One more chart, not currency related, or currency related but not a currency chart, is gold. Now look at this. So when you have a risk aversion move, you have people looking for safe havens, and at the moment gold is providing this safe haven for people who are not wanting anything to do with the US dollar. Okay, so let's get onto the currency charts now. Let's see what has happened. Euro dollar. Once again, we have strife in Europe. The sovereign debt crisis is still ongoing. Each day there is further, potential for contagion, particularly into Spain, Italy, the bigger economies. So the euro is still on thin ice, shall we say. You can see that the moves between the euro and the US dollar have been nowhere near as severe as on the equity markets in the indexes, and that's because highly liquid, problems with both the euro and the US dollar, so the market a little unsure. You can see it's struggling to find direction. It's just congestion and chop at the top of this channel. So for the euro at the moment, I am steering clear against the US dollar. I'm actually steering clear from many of the majors at the moment for reasons which will become clear. Okay, dollar Swiss. Just within the last few hours, the Swiss National Bank has cut their short-term interest rates basically to zero. So they are concerned about the strength of the Swiss franc. Rather than intervening, At this stage, they have taken some other measures to try and weaken the franc. Whether it has any effect is yet to be seen. You can see it is having an initial effect, a bit of a rally for US Swiss. But if we pull up one of the other Swiss, let's bring up Euro Swiss, and you can see it's the same situation. We have a bit of a rally, but have a look at the previous trend. So any correction here, even with assistance from this SMB, how far it goes is yet to be seen. But so far we have high risk from the euro. We have a whole bunch of risk for the US dollar. We've now got additional risk for the Swiss franc, and if we move on to dollar yen, we can talk about the Japanese financial minister, members of the Bank of Japan, a whole range of politicians and finance people from Japan on a daily basis, talking about the strength of the yen. Now, they are talking so much, it's either an excellent bluff or intervention is almost assured. So at the moment, even though we have some congestion happening here, we did touch those tsunami lows, as was called by us a couple of weeks ago. So anyone who was playing to those tsunami lows, well done. We actually did not have a trade open at the time. You did have to be quick to get out, but we did get there. So it has bounced a little bit since then, but it is just in a period of consolidation here. But as I say, the intervention could come from Japan at any moment. If you want to play the majors, one of the four majors, I think sterling or the cable here would probably be your best bet. We have our upwards channel. We broke to the downside, but again today we're having a strong rally. So we do have some support, a bit of a base here. If we switch to an hourly chart, you can see the base that I'm talking about across here, and within the last couple of hours we have rallied. However, this line here is going to prove some support or some resistance, on the way up. But if you're looking for something a little more stable with a bit less risk, perhaps, and you do want to play the majors, that is, perhaps you might look to cable. I, however, am steering clear and looking for alternative pairs. Anyone checking the website today or this afternoon, or this morning UK time, will have seen that we have our head and shoulders here. We've initially broken this on Aussie Kiwi, this is. So we've got our head and shoulders, we've broken this neckline, and we came down and we consolidated here. If I just move this across, you can see we had a period of consolidation and it has since broken down once again. If you bring it into the hourly, you can see it more clearly. So we had this level of support here, which was broken, formed a new base just below that support, but then on some bad data out of Australia, it has broken this. So it has had further downside and gone up to loosely retest this line here. So we are short here from 124.60 with about 100 pip stop, exactly 100 pip stop actually, but we are hoping for some further downside. We're not going to be having our initial 100 pip target on this one. We're going to try and keep this for the medium term perhaps, but short to medium term play. It looks good for some further downside. Euro pound, again we've got our head and shoulders. It's attempting to break the neckline, but we're not really getting any real follow through, any real momentum with the move. So I have not taken any positions here yet. I want to see some sort of clear break to the downside. There's potential to take a long here from this support, but I prefer to go with the trend, and as you can see from back in June, we have a clear downtrend here. Another Aussie that you might like to look at, I'm already short the Aussie against the Kiwi, so I'm leaving this alone, but I think we can have potential for further downside here. after the big move yesterday, which was in correlation with the risk aversion move in the equity markets. We have bounced and retesting this old resistance support line here. Possible short setup right here, right now. You could have a fairly tight stop for potential downside. You know, there's a potential 600 points here. So perhaps I will go back to this in the future. Any others? Euro yen. So euro yen, this retest, we were short here last week from this retest. We took out our target much earlier, but it did come down to test this upward sloping trend line here and has bounced. So really technical, playing out really nicely on the technicals there. But again, you have that event risk from Europe. News could come out about a whole range of sovereign countries there, and then you have the intervention risk from the yen. So be aware of that. Aussie CAD, with the wide spread and also at this support here, there's a possible setup here. It would have been better to take it at the support, but there's perhaps room for further upside there. But I think there's other better Aussie opportunities. And finally, the chart we looked at earlier, Euro Swiss, and you can see this reduction of the short-term interest rate by the Swiss National Bank has given us this very short-term bounce. Personally, these interventions, I don't see them ever having any long-term effect. You do get some initial effect, some short-term effect, but it just creates further opportunities to get short, in my opinion, or to get long on these currencies. So that's where we are at the moment. Midweek video, this one just to bring you up to speed on what has been happening. So happy trading out there, good luck, and I shall speak to you all on the weekend. Bye for now.